Hey everyone, welcome back to Corporate Decoder, the place where we decode the future of business one filing at a time. And today we're diving into why Veritex Holdings might be trying to smooth things over with a little extra information. So what's going on here is Veritex Holdings, a bank, is giving us an update. They're involved in a merger with another company called Huntington Bank Shares. Now, typically, when two companies merge, there's a lot of paperwork and a lot of public announcements. Veritex has already put out what's called a proxy statement prospectus, which is basically a detailed explanation of the deal for their shareholders. But it seems some folks have raised questions leading to lawsuits. Yep, we've got some shareholders suing Veritex and its directors, and even Huntington in one case. These lawsuits are claiming that the initial merger documents filed with the SEC were misleading. They're saying things like false and misleading registration statements were filed, and that might have violated some laws. Because of these lawsuits, Veritex and Huntington are adding more information to their previous filings. Now, they firmly believe these lawsuits are baseless and they're not admitting to any wrongdoing. However, to avoid any delays or problems with the merger and to keep things from getting too complicated and expensive, they're playing it safe and adding extra details. Think of it like a company saying, we didn't do anything wrong, but here are more details just in case to prevent any further fuss. So this report is essentially a supplement to that original proxy statement prospectus, adding a few extra paragraphs here and there to clarify things. It's like adding an addendum to a contract. One of the additions clarifies the makeup of a special committee of the Veritex board. This committee, which includes the chairman and other key directors like the lead independent director and the chairs of important committees like compensation and audit, was actively involved in overseeing and guiding the merger discussions. This is important because it shows there was a structured process for making these big decisions. There's also a bit more background on why the merger happened. It turns out that after some initial talks with another company referred to as Company B didn't pan out, the market conditions improved. Seeing this, the chairman was still open to exploring other opportunities that could be good for Veritex shareholders, eventually leading to the Huntington deal. This suggests they were actively looking for the best outcome. They also clarified that when they first started talking, they signed a mutual non-disclosure agreement. This is pretty standard stuff for early merger talks. It just means they agreed to keep the information they shared about each other private while they figured out if a deal made sense. It didn't lock them into anything and it didn't stop them from talking to others, which is important when you're hunting for the best deal. Now let's get to some of the financial meat here, which is where things get really interesting. This update includes some additional financial analysis that was part of the merger process. For Veritex, when they looked at similar companies, their own stock was valued between 1.15 and 1.78 times their tangible book value. They also looked at earnings per share, or EPS, which is basically how much profit the company makes for each share of stock. For 2025, they saw similar companies trading at multiples between 9.6 and 16.5 times expected earnings. And for 2026, it was between 8 points expected earnings. And for 2026, it was between 8 points expected earnings. And for 2026, it was between 8.5 and 15 earned ballsticks and 16.5 times expected earnings. And for 2026, it was between 8.5 and 15 and multiples between 9.6 and 16.5 times expected earnings. And for 2026, it was between 8.5 and 15. And for 2026, it was between 8.5 and 15. Then they did a similar analysis for Huntington. Huntington stock was valued between 1.36 and 240 times its tangible book value. For earnings, similar companies expected to trade at 11.0 to 12.9 times 2025 earnings and 9.7 to 11.3 times 2026 earnings. This helps both companies understand how they stack up against their peers and what a fair valuation might look like in a merger. And here's a table of recent mergers in the banking sector. You can see deals like Columbia Banking System merging with Pacific Premier Bancorp back in April of 2025, or recent ones like Berkshire Hills Bancorp with Brookline Bancorp in December of 2024. This table provides context showing what other banks were doing and at what valuations they were making deals. It helps the market and investors understand the prevailing conditions. This next bit is a look at multiples from those selected transactions, meaning how much was paid in those past deals. They're looking at price to tangible book value, paying versus trading prices, and earnings multiples. For example, low and high price to tangible book value multiples were from 0.99x to 1.84x. They also looked at pay to trade ratios from earnings ratios, ranging from 9.3x to 15.6x for future earnings. These are the benchmarks that lawyers and bankers use to argue about whether a deal is fair. And finally, on the financial advisor side, it looks like Veritex agreed to pay their financial advisor KBW about $24 million for their help with the merger. A portion of that $2 million was paid up front when the merger agreement was signed, with the rest dependent on the deal actually closing. This is a hefty fee, but it's common in these large transactions. Now, they always include a section about forward-looking statements, which is basically a disclaimer. They're saying that any statements about the future are just expectations and could be wrong. They list a bunch of risks like economic conditions, inflation, geopolitical events, pandemics, interest rate changes, and even social media impact on bank perceptions. This is important for investors to understand that the future is uncertain. They really stress that these future-looking statements aren't guarantees. They're subject to so many things that are out of their control. It's a whole list of potential problems that could make the actual results very different from what they're planning. They mention things like intended plans, expectations, and projected benefits of the deal. They're also talking about when they expect the merger to be completed. But a big part of this warning is that these are not historical facts, and there are tons of assumptions, risks, and uncertainties that could completely change the outcome. This part is all about where you can find more information. They point you to the SEC website for filings, and they tell you how to request copies of the proxy statement prospectus from both Huntington and Veritex Investor Relations. It's standard practice to make sure shareholders have access to all the details. And finally, the report is signed off by Malcolm Holland III, who is the chairman and CEO of Veritex Holdings. This is the official sign-off confirming the accuracy of the information. So what's my take on all this? Veritex is in a merger with Huntington and facing shareholder lawsuits, claiming misleading information. They're adding details to their filings to address these concerns without admitting fault. The financial data showed their valuations against peers and comparable transactions, which is pretty standard for a deal like this. The real story here is the shareholder lawsuits and the company's response to it. While they say the claims are not valid, the fact that they're supplementing their disclosures suggests they're taking the potential disruption seriously. This is a common tactic in mergers, proactively addressing potential roadblocks, even if you believe they're unfounded, to ensure the deal closes smoothly. The risks they highlight are also pretty standard for the banking industry and the broader economy right now. There's nothing here that screams imminent danger, but a steady dose of caution is always warranted in finance. Alright, that's our breakdown of Veritex Holdings' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.